Hello everybody. In the current affairs this week, the week ended 16th of February 2025. The entire print media and the soft media this week was dominated by the visit of our Prime Minister Modi to the US. The primary agenda of this visit was nothing but to set the economic equation between India and the new Trump administration in place. It seems that our Prime Minister has been able to set this equation quite nicely. The reasons being, firstly, the entire range of talks between India and the US has been in an absolutely cordial environment. There was no trace of any hostilities whatsoever. Both the countries agreed that by 2030, we will take the Indo-US trade to the extent of $500 billion US. Another important and noteworthy thing was that the entire trade will be rather dominated by defense procurement by India. This is a substantive change in the policies which has happened first time maybe in the history. It is now the US is considering India as an ally and is ready to sell not just the arms and equipments but also the technology and cooperate in defense production in India and to take it much forward. It is for the first time that US fighter jets are set to be purchased by India. This is first time in the history that US fighter jets will be purchased by India. This is a complete change in the policy stance by the US. All these years, India has been relying on either indigenous or Russian technology in the defense space. Now the era is changing. There were no immediate decisions which were taken on the way tariffs would be imposed, and there would be a long range of negotiations of at least 7 to 8 months, after which, after mutual understanding, these decisions on tariffs will be taken. So as of now, the fear on India of any kind of hostile action by the US on Indo-US trade is something which is put to rest. The second highlight of this week was sharp decline in the Indian stock market. The Nifty 50 went down by more than 2.5%. Nifty mid cap was down by around 7.5%, and Nifty small cap was down by around 9.5%. When we look at the decline which has happened on all these segments of markets from the 52-week high, Nifty 50 has declined by more than 12% from its 52-week high. Nifty mid cap is down by 18%, and Nifty small cap is down by 22% from its 52-week high. The FIIs were continuing as sellers and have sold Indian stocks to the extent of 19,000 crores this week. But the DIIs, as always, which has been happening since years now, they have been the buyers to the extent of more than 18,700 crores. Despite the fall in the Indian stock market, the fact remains that the long-term India growth story is perfectly intact. In fact, it got better by whatever was provided in the union budget, for the reason that government announced a very substantial government capital expenditure spending, and also foregone 1 lakh crores by reduction in income tax, which will definitely boost consumption. This was on the top of the fact that fiscal prudence was maintained in the budget. The fiscal deficit was capped at 4.4%. To add to what was announced in the budget, the Reserve Bank of India cut the interest rates by 0.25 basis point. So, as far as the government action for the economy and the stock market is concerned, they are all positive. The mutual fund equity inflows in the month of January were to the extent of 39,600 crores. The SIP inflows in the month of January were 26,400 crores. The fact remains that FIIs have continued to be sellers in the Indian stock market, but the reasons for that selling is the opportunity which they see in the US and also the strength of the US dollar. Yes, the valuations on Indian stocks in certain sectors and certain stocks have been something which was on the higher side, but this always happens when there is a bull run on the stock market, and after a certain period of time they reverse to the mean and they go for a certain level of correction. But when it comes to investors in managed portfolios like mutual funds and PMSs and investors of SIP, we don't see any reason for any worry or concern. These kinds of market movements are something which is the very nature of a stock market. But as I said and I repeat, that the big picture and the long-term picture of India and the Indian story is quite and absolutely intact. As far as the commodity markets are concerned, gold was up by 1.5% and silver was up by 2.5% in the Indian markets. As far as the global markets are concerned, Nasdaq was up by more than 2.5% and S&P 500 was up by 1.5%. MSCI China index was up by more than 7% and MSCI Brazil was up by more than 3%. MSCI China, the PE of it is presently 11 and PE of the Brazilian market is just 7. So global investing is something which is seen as a means of diversification for Indians when they make their equity allocation for their investments. That is all for this week. Thank you.